gold craze has hit everyone in the last 1 year. The way prices of the yellow metal have escalated, it has also attracted the interest of the first-time young investors. Now, most of these investors, ladies and gentlemen, are young, vulnerable, and do not have a lot of money. Now, since not everybody, and especially these young investors, can buy physical gold or have knowledge about gold ETFs or EGRs or even sovereign gold bonds, what's now happening is that market forces are creating new options. Digital gold being one of them. Now, digital gold, let me tell you very frankly, it's not illegal, but it's not regulated either. Now, how does this work? With just rupees 100 or in some cases even 10 rupees, anyone can buy gold from an app, track prices in real time, and redeem it later as coins or bars. Now, digital gold is a way to buy and own small amounts of gold online. You purchase it through apps or websites which claim to store an equal amount of real 24-karat gold for you in secure vaults. You get a digital record showing the gold you own, and you can sell it back anytime or even ask for physical delivery. Now, it's marketed as easy and convenient. You pay money on an app or a website. The provider records the corresponding quantity of gold credited to your account. The provider, or in this case the vault custodian, claims to store physical gold for you in an insured vault. Sometimes a refiner issues a branded bar or receipt. You can sell this gold back to the platform, or in some offerings request delivery of physical gold coins or bars at your home. But now it has attracted attention from the Sebi. The Securities and Exchange Board of India on Saturday, 8 November cautioned investors against buying unregulated gold products like digital gold or gold-related online products. In a release, Sebi mentioned that it has come to the notice of Sebi that some digital platforms are offering investors to invest in digital gold, e-gold products. Digital gold is being marketed as an alternative for investment in physical gold. Now, Sebi informed the investors that the protection mechanisms will not be applicable for investments in these digital gold or e-gold products, as they are not identified as securities and are not regulated as commodity derivatives. Unlike gold ETFs or gold EGRs or sovereign gold bonds, these online gold entities, ladies and gentlemen, are not regulated by Sebi, and that's why they can emerge as a big problem. Simply put, these apps are operating in a regulatory vacuum. If they default, delay redemption, or fail to deliver the physical gold they claim to store on your behalf, Sebi cannot help you. Digital gold platforms function without regulatory oversight, which makes it difficult for investors to assess their credibility. There's the possibility of counterparty risk. The platform may fail to deliver gold or default on redemption. Additionally, there's operational risk around whether the gold actually exists or is stored securely. That's a big risk to take. Remember betting apps, online gaming apps, loan apps with extremely high interest rates? Most of them were unregistered. They were not even registered by the RBI. Or online betting apps. Sebi seems to be proactive now in protecting young first-time investors because they are the ones who use these apps maximum. Sebi isn't saying don't buy gold, it's saying don't buy unregulated gold without knowing the risk. So what's the alternative? The Sebi wants investors to stick to regulated gold products like gold ETFs or electronic gold receipts, EGRs, which trade on stock exchanges. Or in some cases, if someone has offered to sell you digital gold, or in some cases, selling gold at a very lucrative price, please be careful. Verify its credentials and only then proceed. Because, ladies and gentlemen, like history has shown, vultures are everywhere, and this place is no exception. Stay tuned to Live Mint for more such updates. I, along with my team, shall see you soon.